Good evening, all. Ira Epstein of Linn Associates with your metal market wrap-up for Tuesday, and we're at May 18th, 2021, and the time just after 6 p.m. Central Time. Well, life is getting back to normal, and we're seeing it across the board. In Chicago, they just announced that all of our big music festivals are on at full capacity for June and July. Now, you may not think this is a big event, but we get hundreds of thousands of people coming in. They say 75,000 hotel rooms will be booked for this, so it's a three-day event, just one of them. Then I happen to live where the other one is, and it's huge. So life is getting back to normal, but what's not so normal is what is the stock market doing? Well, normal might be the old adage, sell May and go away. If it were me, I'm just giving you an idea, circle the highs of the month so far. If taken out, obviously that adage isn't working. But the way the markets are sinking back, I'll talk about it in the financial update. In the metal markets, you know, this morning I did a fast interview for Bloomberg in Canada, and the market was trading around 477, 475, right in that range, and I said, you know, it looks high. And we were going, well, don't you think it's just going to run to $5? I said, no, we're probably in the 8th or 9th inning of price increases in copper at this juncture. And that's because the market's building in everything, and it's got a confluence of Peru and Chile, both. Laborers might go on strike there if they can't get contracts they want. In Chile, obviously the Constitution, there was a big vote taken. That could be a problem for the market too. And of course, prices do, in a way, get ahead of themselves, and you got to pay attention to that. We also saw in the energy markets a bit of slippage here, and I bring this all up because it affects gold. Now, the gold market's acting good as the cryptos have been getting hit. This isn't wrong. You're down to $42,000 in the May Bitcoin. Remember, this was a $65,000 market just recently. So you take that money at $60,000 for your Tesla. You gave it to Mr. Musk, but you're running a company as Mr. Musk, and he said he didn't sell any of these Bitcoins, so he's now out $20,000 roughly on that car. I don't see where that makes a lot of business sense. He's smarter than I am, but it's just a point that I'm making. And how do you hedge it? Well, maybe that's what he's doing, is hedging in the futures markets and using that. I don't know. I don't know their business model. Dollar index down, and that is helping the metal market. So as we take a look, gold is up so far 1.7%. It has stayed very nicely over 1781.40, the 18-week average. And frankly, once it cleared it, it never even looked back. Now, whenever a break sets in, a big one, that is what I'm going to look for on the support. That doesn't mean that if you're a buyer, you're waiting for just that, but it gives you an idea where the levels could be of support. You've taken this market in a stepping ladder fashion all the way up, and when you look at that, you see it here on the swing line, this latest, and the word is latest, thrust to the upside has gone from 1808 to 1875. So we have a $68 rally roughly in the marketplace that is hanging in there. The question is, if one were to buy it here and you put a stop under the most recent low, you got a bit of a problem. That's a big risk. I also don't expect the market on the first challenge of the 200-day average to just pick up here and run. Could I be wrong? I'm like Swiss cheese. I've been wrong so many times over my career. But I play the percentages in terms of explaining to you things. That's a big number. You're catching stops, but I would be surprised that you can stay over that. And I'll stay with what I teach in the Bollinger Bands, that the markets rarely stay over them. They can get to them, they can run on them, but they rarely stay over them. Now, here's what has got me excited. If we take a look at the slow stochastics, you cannot count Wednesday's action, so we throw it away because you and I don't know where it's going to finish. But we know that both numbers on Tuesday were over 80. They were over 80 on Monday, and they were over 80 on Friday. Therefore, at the end of this, my enhanced Bollinger Band course comes into play, and buy signals will come out of it on a certain method. If you want to know it, take the course, and then this should make sense to you. For my paid subscribers, I'll be putting out recommendations based on the action, and you know that if you've taken that course, what that action will be and where it'll be. In the gold-silver ratio, you're staying underneath that 18-day average. This is more what I thought gold would do on that first challenge of the 18-day average. Instead of just went right on through it and paid no attention to it. This is very typical. And it is still saying silver is stronger innately than the gold market is. Now silver has pulled back. It does not, as a chart pattern, have an embedded reading. So as a chartist, while the momentum is looking at one thing, my work is saying gold is stronger than silver because of the embedded reading. Lose that and I'll have a different opinion. Embed this, get excited, but you're not even close to embedding. You're overbought. You went up to the upper Bollinger Band, and the first challenge of it is typically where I think the pros step out of the market. That's what I think is going on. In the copper market, we're starting to slip back right now. Tonight's low is the same as it was intraday. The pattern is lower highs, lower lows. I'm interested in seeing, is the market going to go for these highs, or is it going to do what I think it's going to do, which is when you lose an embedded stochastic, you normally make a run to the 18-day average of closes. A time element with that is very important. You know, if you use something like the Arun indicator, you start learning about time to price relationships. And we have 3 videos on our website that teach that all to you, and a course I put together, and that one is free. But if you look at this, what's happening is it's more or less drifting sideways, but the 18-day average is jumping each and every day, roughly 200 points, 2 cents a day. All right, so what's really going on is they may come together before this is taken out, but at a higher level, which adds credence to the bullishness still of the market, even though I expect there could be a pullback. In the platinum market, you have a pattern now of lower highs, lower lows. You're under the 18-day average. I think the pros are probing the short side against this 18-day average now. Stops over yesterday's high. If you take that out, then I think the upper Bollinger Band. If you don't take that out and they get short, that'll be still where I think their stop is, which will be in the platinum market around, what, 1250, 290, looking for the 1194 area. In the palladium market, we're getting failures against the 18-day average of closes. We're also swinging and bringing in, just crunching now, price with the Bollinger Bands. Now again, those Bollinger Bands are important because 95% of the time this algorithm will keep the market within that band. It's going to eventually break out of it, but it does so when it gets narrower, not typically when it's in a run to the upside. This is like a pressure cooker as that happens. This is the pressure cooker. You're spinning around and you're building price momentum, and then wham, that's when you break out of the bands. And it can be to the downside the same way. So keep that in the back of your mind. In the dollar index, you're now oversold. I think today is where a lot of the pros will have taken off shorts in the dollar, waiting for another bounce in the market because you are oversold. And again, after hitting the 18-day average, you went right back to that number. It's like a pinball machine. When you hit it, you reset. That's the resistance again. And when you get to the number, you hit it with your flipper, you take your money off the table. I loved pinball. I was good at it too. And the Ethereum, you're back down to the 18-day average and sitting here. As Bitcoin goes, it's taken Dogecoin. I really call it doggy coin. That's what it was, but it's Dogecoin and the other cryptos with it to the downside. So you put it all together, you try to come up with a game plan, and I have one for you. Why not take a look at this course that I've got on the Bollinger Band? Now, let me explain what it is. This gives you an idea of where to come in the market, the high probability trade, the low probability, what not to do with it. There is no technique that works all the time. If you know it, who would sell it? But there are techniques that work more times than not, and you can get an army of traders with you, and that gets to be fairly exciting. I think I found something in that camp. Again, nothing works all the time. Take a look at this and you make up your own mind. I'm Ira Epstein. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all 3 of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and/or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.